I don't even see it up there. Oh. Hi, folks. Bill Fairman here. We are going to talk about what freedom, financial freedom, actually means to you right after this. Greetings from the grand downtown Rock Hill, South Carolina.
Woohoo.
We are Carolina Capital Management. Thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors.
Mm-hmm.
Wendy reminds me I have to smile.
You can do it
You
and
can
talk
you
at the
can
same
stop
time.
now.
We are Carolina Capital Management. We are private lenders in the Southeast for real estate professionals. If you have a project that you would like us to take a look at, go to carolinahardmoney.com. Click on the Apply Now tab. If you are a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget about Wednesdays with Wendy. Wow.
That was cool and short and sweet, and it matched my junior high school colors.
That's right.
Very
So
nice.
Wendy donates 30 minutes of her day per person
Mm-hmm.
on Wednesdays to talk about real estate. She's usually booked up a couple of months in advance. So there's the link. It will be over in the comments and questions side, which is either going to be on the right-hand side of your screen or underneath, depending on the platform that you are viewing us from. Well, since we teased it last week, this show is recorded.
That's right.
So we don't have any breaking news because that would have been last week's news.
That's right. We don't know. We can't see into the future, although
Yeah.
sometimes we claim that we do, but we really can't.
Do you have
Only when
any-
it works out.
Do you have any additional commentary you'd like to add for the fake breaking news?
For the fake breaking news?
Yeah.
No. But no breaking news, but we're at like the first month in 17 months where homes are selling under asking price.
Oh, nice.
Yeah, that's
So
amazing.
the first time in 17 months, homes are now selling under asking price.
It must be a crash.
That's what they would have you believe. Yeah.
Do you remember back in the day when people actually negotiated price?
No one knows what negotiation means anymore.
Well, we do now, and that's something that investors really need to, especially wholesalers and rehabbers, really need to understand that, because if you're using comps from 6 months ago, they're not real, are they? You've
They're
gotta
real.
use
They're just
ones-
not relevant.
Yeah, that's right. You need to use the ones from very, very, past 30 days or less,
Or from the future.
Yeah.
You can do that.
which is what we do.
Kind of our point here is that you don't want to listen to the noise. The
That's
noise
right.
is just that. It's noise. We were not in a normal market. We haven't been in a normal market in several years.
Yeah,
It has been crazy out there, and all we're doing is we're coming back
to reality.
to a normal market, and we're
Mhm.
still above the normal market.
Yeah.
I mean,
Yes.
we really need 60 to 90 days on market for homes, and we still don't have that yet.
I mean, the average home value, I think, is like $375 now, which is way more than it was 2 years ago.
Yeah,
Mhm.
and listen, I don't see days on market slowing down an awful lot. I mean, it's going to come down. I get it, but we're
Go
still
up.
at, but we
Change.
Sorry, we had this conversation the other day, and it really got me.
stop flipping me around. We still have a housing shortage out there. We're about 5 million behind on new homes.
Yeah.
And we still create households. People still need a place to live.
Rents are going up.
All right. So I'm going to pause right now for another fancy David Phelps moment.
I just took a deep breath, man. That's how I feel when I'm around David. So yeah, that's really relevant.
David has been gracious enough to give us 2 shows. He's an awesome guy, great friend of ours. Let's bring him on. Thank you so much for joining us, David.
Fresh off the beach, I'm here.
Did you get a sunburn from that?
So one of the great things that you do is you teach people, mainly private professionals,
Doctors, dentists.
but anybody that wants to learn, because you have a lot of books out there about this too. It's about being financially independent and free. So what does it mean to be financially free?
It's to have enough income, enough cash flow that's produced by investments. I like asset-based investments. So asset-based income that will produce the cash flow that you need for your essential lifestyle, whatever that lifestyle is. To me, that's financial freedom. And we'll go into more depth on what that allows people to have, why I think it's important. But essentially, financial freedom gives you choices and options. If you don't have to go to work or keep the business running or operating the way you've been doing it, or putting up with certain people or clients or whatever it is you think you have to do, when you're financially free, you can change the model. You can try things. You can test things. You can take new ideas on it. And that's I think the real goal in being financially free. It's not to do nothing. It's not to be on that beach that you guys stuck me on for the last week. That was great. but I don't know. I can't live there forever. Which is nice. I need to be doing something, but I want to do it the way I want to do it. I want to work with people that I choose to work with, that I think we have some values in common, that I can actually provide a service or a product that they actually appreciate. And there's an exchange for services. It's about the money, but it's at that point not all about the money. And that's what changes your whole mindset about always trying to, eke out enough money to pay the bills and have a nice vacation and maybe get a better car. That's just the common, we called it treadmill last week, or the hamster wheel, as Jonathan said, that too many people are on. And it's just changing the mindset about how money works that can really change the lives of people at any dimension in their life, whether they're modest income earners moving their way up, or middle income, or even higher income, which typically they have the hardest problem. High income actually have the harder problem with this than people that are a little bit lower on the scale.
Interesting. Is that, do you think that's because they had that mindset of they don't know what enough is yet?
Yeah, I think not knowing how much is enough. And then I think also there's that tendency to elevate one's lifestyle, because as you earn more money, because you're more proficient, efficient, better at what you do, better products or services, that's great. We should all aspire to do that. As the income goes up, then typically it's like, well, I need nicer things. And there's nothing wrong with that. It's just, don't let that get out of hand. I'd rather see people make investments that can then provide for the nicer things that they choose to have.
Well, one of the things that I think is so important that you teach through Freedom Founders is you allow people to have the fear removed. What's going to happen if I stop? If a highly paid professional is, their business is running great as long as they're there. But when you're no longer there, what's going to happen if I stop? How can I stop? I have this great fear of doing that. And you have just done an incredible job of teaching people that they can throw that fear out the window because there's alternatives, right?
Yeah, and it's not even just to stop, Wendy. It's just even to cut back a little bit, or let's just be very pragmatic. It's getting home in time to actually have dinner and maybe go to your kids' soccer games. Right. Hardworking people who just feel like they have to grind, to your point, don't know how much is enough, feel like they'll miss the opportunity if they don't get all they can while they're young and energetic, but they miss out on the very thing that they can regret later in life when they get to a point of, quote, retirement. Don't like the word, but retirement. But then where are the kids? Kids are gone. It's like, oh, but now I have the time. I have some discretionary money. I could actually live my life, but you missed out. And so giving permission back, removing the fear that people have by not having to grind and actually take some extra time off. That's the biggest thing that showing people how investments in alternatives, particularly real estate, provides that sustainable passive income that can start to replace the need for the person, the hard worker, to have to grind as hard as they grind. So you can start to taper it back. I've got docs that are, in their 30s and 40s. You've met many of them. They don't have any idea of giving up, what they do anytime soon, but they just like the fact that they can actually take, a full day off during the week, or maybe a day and a half, or, get it down to 3 days a week and not feel compelled to have to keep at that grind because everybody else is. And that's that comparison factor that doesn't serve us very well at all.
Yeah, no, touch on financial freedom. It reminds me of a few episodes back, we had Chris Miles on here, and Dr. Phelps, I know you watched it, so I'm not going to tell you anything you don't know. But, he was on there. He's telling about, the financial freedom model that everyone is prescribed in America and the world abroad is invest, put money into your 401k, put money in savings. And he gave this, description of his father retired and, was going to draw on his 401k. And he wanted Chris to look at it. And Chris did and said, well, you're going to have to die in about 5 years because that's all this is going to last you. And that was like the wake up point for him and his dad apparently too. But that's not financially free. So, that model of what we're prescribed doesn't seem to work. Your model, David, can you I know you've kind of tiptoed around it, but can you kind of give us a little more of the nuts and bolts and the nuances of what you are telling your people, how to build this financial freedom that maybe isn't 401k?
Yeah, the 401k, the traditional financial retirement model, as you described it, Jonathan, is an accumulation model. It is about discipline, and discipline's important. It's taking money and putting it in a vehicle, this case, an IRA or a 401k, that's basically invested by somebody else who's going to choose stocks, mutual funds, bonds, whatever it might be, kind of a mixed financial portfolio. And that's supposed to just, sit in those accounts and grow over the years. Well, they grow, and then of course, we have a market downturn, and it drops back down and back to contribution level, this up and down. What retirement requires, or let's just say removing yourself from active income, what it requires is cash flow, not accumulation. It requires cash flow. The traditional model that we're talking about, the 401k, does not provide for cash flow. The whole game there is, well, build up as much as you can, and then you ask a financial advisor today, well, how much should that be for any one person? Just they can't give a really clear answer. Well, of course not, because the variability in the economics today, with inflation factors and all the volatility, they can't really. So what they tell people is just, well, as long as you can keep working, keep working. Well, that's because they want to manage more of the capital. There's a little bit of a incentive in there for them to keep managing their money. But the problem is the accumulation model is based on you have so much, and then they try to run these algorithms with this fancy software to say, okay, well, based on how much you've got here, we're trying to forecast, another 25, 30 years down the road. How can they forecast the economic models? Could they forecast COVID? Could they forecast all the helicopter money we've had? Could they forecast it? No, they can't forecast any of that. How do we do it with cash flow? Well, it's the fundamentals of real estate, as we know them very well, is real estate keeps pace with inflation. So I don't think it's very healthy for our economy to be running at 8.5% or 9% inflation. The CPI rate that we have now, that's not healthy. But you know what? Our assets, and you've already talked about it earlier, rents go up, the values go up, so at least we can keep pace. Financial model, not the case. You start having to deplete that financial model, that accumulation model, deplete it over time, and try not to run out of money. Chris Miles, talking about his father, was looking at that saying, yeah, Dad, you need to take out this much every year to pay for your burn rate because there's no cash flow in this model. It's just, you just stacked it up as high as you could get it, but you only stacked up enough to last you 5 more years. You look at inflation rate today, and let's just peg it at 8.5%, or even 8%, so I can do the math in my head. Use the rule of 22. Every 9 years, with an 8% inflation rate, the purchasing power of your dollar, or your $100,000, or your $1 million, whatever you have, is cut in half. Cut in half. So you thought you had $1 million. It was me. That's going to work really well for me for the next X number of years. Oh, but gee, in 9 years, it's only going to be worth $500,000. And then in another 9 years, it's worth $250,000. How's that going to work out when you've not attached your plan to a vehicle that actually keeps pace with inflation?
Very well said. Very well said.
Yeah, and when you look at that model as well, it has a lot to do with timing. I know our mutual friend Ryan Parsons and Chris Miles, I had discussions about this. When you use that accumulation model, when you're using the 401k, putting money in the stock market, especially with the 401k, we have, and then this is anecdotally, I don't have actual statistics on this, but everyone that I've known that has had one,
I'm surprised you don't, sir.
everyone that I know that has had a 401k over a period of 20 years, they end up with about the same amount of money that they had for their contribution and their employer's contribution. They made no more or no less, pretty much in that same ballpark. So having it in the stock market really, for the most part, over that long period of time, all it did was hold it in place.
Well, it's Wall Street. Wall Street is a billions and billions of dollars, trillions of dollars platform, major marketing platform, and essentially Wall Street indoctrinates the majority into thinking that's the plan. And so it's just trying to change people's mindset to say there is another way to do it. It's not as easy as clicking a mouse. It's not as easy as just having money pumped into your 401k. But if that plan's not going to work, then I tell people, shouldn't you be considering something different? Even if it means you have to do a little work and get a little education to figure out how this is going to happen. Doesn't that make sense for you? Otherwise, you're going to be in a very nebulous place when you want to actually take your foot off the pedal of that active income and actually go into some transition to maybe some kind of retirement model, whenever that might be. You can't do that with the accumulation model. It's not there.
Yeah.
Well, and just as inflation changes, so does your financial number, depending on what age you are and, what's happened all around you. How do you keep up with that change in what your number is? How often should people reevaluate where they are and where they're going?
Well, I think relatively often, and most people don't. We talk about in businesses, and I think you mentioned earlier, Wendy, about having with the business, you have a regular monthly financial meeting, and you go through the expenses and the revenues and look at profit. And I think you've got to do that on the personal side too, whether you do that yourself and you're using a QuickBooks or you have a accountant or somebody can help you. But I think you've got to look at it on a regular basis, because there is creep. Even without high inflation, there's creep. So you add inflation into the normal creep, and things can get out of hand. So you've got to keep a real eye on what that creep looks like and realize that it does increase over time unless you really are judicious about removing the things that are no longer need to be part of that burn rate that we talked about.
Mm-hmm.
You have something okay.
Bill, you're always taking a breath. I'm not sure.
Well, the good news is I'm taking breaths.
That's a first.
So I know we all preach diversification in our real estate portfolios, and everyone has different goals with their freedom. Some of it is traveling a lot. Some of it is, making sure I have a legacy that I can pass on
Spending
to my
time with the
kids.
grandkids.
Good causes that you want to participate in. Do you feel like it's more important to own actual assets or to be a part of more passive
Invested
in investing,
like syndications, funds?
Yeah. And again, I know it probably depends on each person and what their goals are, but we'll just talk about you. In your opinion, because of your lifestyle and what you want to do, are you more into passive stuff or more into property holdings?
His extravagant lifestyle, driving around that 1996 Toyota.
Yeah. No, it's more of it's a Honda Accord, because they are the
most reliable,
least expensive to operate over a period of time.
I think your answer is right. It depends, and it's changed in my life. So when I'm younger and I have much more time than I have money or capital to invest, then it makes sense for me to put the time in and really own the specific assets. Like, that's what I did. I started buying properties, rental properties. I got into understanding the note side or the debt side and financing properties and carrying paper or buying paper. But basically, I was involved in the operational aspect of locating, acquiring, managing these particular assets when I was younger. And that made sense. Where I'm in my life today, No, I don't want to talk to another tenant. I'm done. I'm done with that. I'd rather have somebody else managing my assets, and that's what I call 1 degree of separation from your money. Now, if I'm managing my own stuff, then I'm fully engaged with that. I get to call the shots, and so that's control, and control is good, but then control also requires time. I want more time back in my life, so I can be 1 degree of separated from my money by investing my money in Carolina Capital, because I know Bill, Wendy, and Jonathan. I get to know you. I meet with you. I break bread with you. I'm kind of inside like the boardroom of what's going on with how you're managing my money. That's as best I can get without doing it myself. On Wall Street, I could never do that. Maybe I get some financial reports, but I never actually get to talk to the people, the principals who are actually running operations to really know what's going on inside the culture. You're very open and transparent. You talk to people all the time. You have Wednesdays with Wendy, and you do these shows, and I can really get to know you and decide, these people that I really know, like, and trust, and I want to be a passive investor at this point in my life. So I think it just depends upon where you are in building your game plan, your wealth plan, as to how active or passive you might want to be.
And the networking is so important, and being involved in a community that has the same values and goals, people that are like-minded. That networking is so very important. We'd love everybody in the world to put their money in our fund, but we also have friends that operate funds and syndications, and that we're happy to refer to other people because we know those operators as well. So, you find one good one, ask them, who else would you recommend? Because we all kind of think alike. Those of us that think alike stick together. And you've done such an incredible job of doing that through Freedom Founders, the group of people that you have chosen not only as trusted advisors, but the people that are coming in as members of Freedom Founders. It's just amazing how you've been able to pull just the right matchup of people.
It is important to surround yourself with people that are like-minded, have similar values, and are on a similar path of, again, in this case, creating freedom. Different ways to do that, different definitions, but with the same mindset of we don't have to follow the herd mentality, the group think of you do the 401ks. It's one of the first things that happen when people come, to our group, right? Is they typically have the 401ks, and they've done all that, but they really recognize very quickly that in a place where they are networked and associated with like-minded people, that there is a know, like, and trust element to it, that they can go off in a different path and be much more successful as their own financial advocates, and not just advocating it to a platform like Wall Street.
So David, you've said this before. If your current self was talking to your younger self, what advice would you give yourself in starting off investing? You're 25 years old. What advice would you give yourself?
Well, I started about then at that age, and so that was a good thing. I got started. Just make a decision, get started. So that's number one. What I could have done better, and maybe it wasn't my fault, but I would have found mentors, like local mentors, more quickly. And this is back in the dinosaur ages where we didn't have smartphones, we didn't have internet, we didn't have Facebook, we didn't have meetup groups. There probably was some kind of real estate group but how do you, I didn't know how to find them. I I didn't know. Today, it's so easy to get connected. So I'd say make a decision, get started, but surround yourself, find somebody, a group, or, a mentor. What I have found is that, I've been a mentor now to mentees in the same regard that I wish I would have had, where I have deployed capital, and you do the same thing. When you deploy capital with somebody who is, a boots on the ground investor, rehabbing houses to fix and flip or hold as a portfolio asset, they'll ask you for advice. I mean, the smart ones will. The smart ones say, and of course, you're not going to loan money unless you think the business plan is relevant. But you're there not only to deploy capital with them and help them with that aspect, but also you got all these years of advice. Why not access that while you're building your plan?
Exactly. That's what I try to tell my kids too. I try to remind them, remember, I've got 61 years of experience. So I've
just means
stepped
you're
in all
old.
that stuff that you're trying to
That's-
avoid.
That's what they're thinking. You're just old.
Yeah, that's true. That's true.
I don't need to be listening to them.
Yeah, it is tough. I often say I was never as smart as I was when I was 21.
It's been all downhill.
Well, David, let's talk about your book, Inflation. I want to plug that, but there's another one I want to plug as soon as we're done here. We'll have the link to the Amazon in the chat as well. Let's talk about your newest book first.
Yeah, the inflation book we published in April of this year. I sort of saw the tea leaves of what was probably coming, and so we got with it and wrote this book to give people a sense of what does this mean in a time of inflation, which we haven't seen in 40 years, really since the 70s and early 80s did we not have inflation of this level. And what does that mean to the financial markets? What does that mean for people's retirement plans? What does that mean for all the financial plans that people put in place? There's got to be some changes there, and so the book creates a lot of the economic backdrops of how all this came to be, how we got to here, but most importantly, like what do we do going forward as our own financial advocates. So the book's there. Thanks for putting the link up.
Oh, absolutely. The other one, since we're talking about financial freedom, I want to talk about Own Your Freedom. It's another book that is fairly recent, and you want to talk a little bit about that as well.
Yeah, Own Your Freedom, I co-wrote with one of my mentors, Dan Kennedy, who I've spent a lot of time with, and so we co-wrote the book. We outlined it to really be a lot of the fundamentals of how money works, the mindset of money. We each wrote separate chapters, but they cross-pollinate each other. So you get to hear two different voices, different experiences. I'm very pleased with that book because I think at a very high level, it has something in there for everybody, no matter where you are in your life, what age you are. There's concepts. It's really a book of concepts. I'm not giving specific strategies about how to go out and flip houses or how to invest your money per se, but it's a lot of key concepts that I want to make it an evergreen book that would be kind of a really a staple in somebody's library if they chose to utilize it.
Well, and then your other book too, I have to talk about this when we talked about the next gen and what you would say to your younger self. What's the book that is good for your teens and young 20s?
The Apprentice Model.
Yeah, the Apprentice Model, that one.
Yep.
I gave that to both my kids and both my sons.
Well, yeah. Oh, thank you. There, I was looking for it. It should be on a shelf here somewhere close by, shouldn't it? Funny how that works. The Apprentice Model. Yeah, that's a book I wrote a few years ago, really to focus on next gen, younger generation, and some of the concepts we talked about today about getting started early and realizing there's different pathways to get to freedom. You don't have to get degree after degree after degree in college or graduate school. It's not a requirement at all. Now, I'm not saying it's not something for some people to do, but I think there's better paths, and the Apprentice Model is really based on a mentor-mentee experience. Find people in business or investing or real estate that are good people, that you value who they are as a person and their values, and that they also have some business or investing sense. Just go work for them. I don't care what you make. That's not the important part. It's just go work for them for 6 months, a year, get the experience. It's the best thing you could do as a young person before you get out and get kind of roped into a career path. You'll have a much bigger exposure to the world and really what's important for you.
Yeah.
Well, frankly, that's the way the trades all used to work.
Yeah.
Right.
Back in the old days.
That's why we have a shortage of good tradesmen,
Yes.
is because you don't have that apprentice model anymore.
Yeah.
And the guidance counselors at all the high schools pushed you into a 4-year college.
Right.
And
It's almost like they get a kickback, isn't it?
Well, here's the thing. If you have any business acumen at all and you follow an apprenticeship model yourself, you can be in business for 5 years and then open up your own place and make tons of money easily.
And be happy in what you do.
Yes, absolutely.
I was just gonna say there's so many skill sets outside of a technical expertise, skill sets that are transferable, sales, communication, marketing, just understanding the operations of a business. Anybody can take those, degree or no degree, and go run with that. And I think those are important skill sets that are missing badly today.
Absolutely. Absolutely.
Listen, I appreciate you being so gracious.
Yes. Thank
coming
you.
on and spending all this extra time with us.
It's been great.
It's been an awesome show. And
Well,
I know it's going to be beneficial to a lot of folks out there. I can't wait to see you in
October.
Yeah. I was going to say a few weeks, but it's a little more than a few weeks, but it's close enough.
Close enough. Well, great to hang with you all. I'm back to the green room, the beach, and the margaritas.
All the food's gone now.
Are you going to be at Quest? Are you going to be at the Quest event?
I'm not going to be able to make that one. I can't.
Oh, I hate. We're going to miss you there.
Yeah.
Well, it's okay. It's hot and humid.
That's right. Well, he lives there. Well,
Not inside the hotel. You'll need to park out in a hoodie inside the hotel. Trust me.
So anyway, thanks again for joining us.
Thank you, David.
Folks.
Good to see you.
You Yeah.
Okay. So I forgot something, which is our question of the week. What is your financial focus, priorities, values? Is your money management in line with all of that? And you can leave a comment in the comment section, and we will get to the answers on the following show. Since we're doing all these in advance, it's hard for me to keep up with them. Anything else we need to plug?
just say bye.
Okay, bye. So. Oh, we're back. They're going to mess with me now. Thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management, private lenders in the Southeast for real estate professionals. If you have a project you'd like us to look at, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe. Hit the bell, and don't forget about Wednesdays with Wendy.